Hey everyone, welcome back to Invest in a Moment. I'm your host BT, and in today's episode, we'll be diving into the transformative journey of building wealth while also building a life. Today, I have two guests with me, one you might be familiar with, and one who is experienced in his field. I'll let them introduce themselves. We have...
Okay, it's me again. My name is Amir. I'm CIO of GetMD. I come for the second time. You already seen me in my first podcast. Okay, let's hear more from me. Thank you.
Welcome back, Amir. And...
Hi everyone, my name is Ian Wong. I am founder and CEO of Uno Advisors. We are Malaysia's first licensed financial planning firm for women. And we strongly believe at Uno that your money, your hard-earned money, should be used to empower your life, right? We want you to spend, which is strange for a financial advisor to say. We want you to spend to enjoy the good thing.
Oh, very descriptive. I love that. We'll dive more into what you do later. But today's episode is really just talking about, again, building wealth while building a life. Whether you're in your 20s, 40s, 50s, you're filled with different milestones, career shifts, different priorities, right? And how can we then, what we're going to talk about today is, navigating this, changes and challenges and how we can adapt to it with maybe different financial strategies. Or in your case, Ian, how do you advise your clients based on their current situation or needs? So to kick off, I want to throw an icebreaker question just to get the conversation flowing a little bit, right? So to both of you, actually, maybe Ian, you kick us off, right? What is the most unnecessary but totally worth thing that you spend money on?
Well, I would say probably my bed.
Okay, that's a good answer.
Because I was reading articles saying we spend a third of our lives, a quarter to a third of our lives sleeping, and I felt that I didn't want to wake up with all aches and pains and so on. So I know a little bit boring, but there was a promotion and it was a very expensive mattress, and I thought maybe I should invest in my health.
Totally worth it. How does your back feel today?
No issues.
Amir, what about you?
Okay, basically, I'm slightly different than what Ian do. Basically, I went to a trip to Indonesia. Basically, because I'm a fund manager, I used to go everywhere, right? So basically, all my trip are funded by the company lah. Because I went to see company. There's one time actually I take my own leave, plot leave. I do what I call business trip. I see a lot of company, go to a lot. See, actually, I started from Subang, go to Batam, went to Bandung, almost all over city in Indonesia lah. Even some nation doesn't know that kind of city lah. It so happened I went to a small city called Jepara, Indonesia. The trip cost me about 2 weeks, maybe a few thousand meter. I went to city of Jepara. This city of Jepara is very remote. Even you go for Semarang. Semarang is a remote city, right? From Semarang, only 90 kilometers. To go there is 4 hours. To come back is 5 hours. So there's so many foreigners there. And these foreigners stay long term.
Wow.
Oh, they go there and they do business there. Jepara, is a what you call furniture city of Indonesia. So basically, foreigner went there, go there, and they actually buying furniture and they sell it back to their home country. So I met one French guy there. He basically own a warehouse there. Basically, that warehouse actually his sister-in-law work with her, that's French guy. So that sister-in-law now become my wife. That what becomes so worth it, right?
That is worth it. So not so much about the trip, but it's what you
Not
about
about
the
the
trip. Okay, so that is definitely cool story. I honestly never heard of Jabara, right? I've never thought that before. But okay, good value, lifetime value. And I guess next is another sort of rhetorical question. Let's just say, right? Oh, you might happen tonight, who knows? But if you won the lottery, let's say $1 million ringgit, right? But you only have to spend it today in one day, right? And you can't keep it, right? You can only spend it all. What would you do with the money?
Well, thinking practically, you can't get a property straight away, but if you could, I probably would do that. Otherwise, then maybe buy a car. It's not an asset to you in the long run, but if you really had to spend it all, I suppose go for very expensive meals. I don't know how much you get in a day, but
As much as you can.
Yeah.
What is your dream car?
I don't particularly have a particular dream car that I have to test it out and see how it goes. But I do know at this point, I'm not into the full 100% to EV yet, just because of convenience of charging. But if we do that, then I wouldn't mind.
Okay, cool. I mean, how would you spend $1 million ringgit?
10,000 actually, for me, actually quite a huge amount, but not huge enough to buy quite a number of assets lah. So basically what you do, what Malaysian always know lah, makan. You just invite as many friends, as many relatives, go to a good restaurant, just spend.
So you have a huge party.
A good networking,
Right. Wow, that'd be a huge dinner. I can imagine the restaurant would be quite
Yeah,
short.
same man. Or eating.
Just eat.
That one Malaysia. Yeah. Expert one. We known to be the highest obesity country in Asia.
Well, true.
What's your favorite food?
I typically like Malaysia. Obviously it's nasi lemak in my opinion, but I like quite what you call traditional Malay meal, like mi bandung kind of thing.
How many packets of nasi lemak do you think you buy over a million and get? More than a million.
Depends, you go like sandwiches.
Depends how many people you want to invite also to your kenduri, right?
A million people per million. I don't think. Do you even know a million people? So as we flow into one of our main topics, let's talk about navigating financial uncertainty. So maybe Ian can kick us off. What do you think, in your experience, are predominantly the main financial challenges that maybe people in their 30s are facing right now?
Well, that's a good question. Usually, when you move into your 30s, I think whether you are single or you're married with kids or without kids, generally the level of responsibility required has to increase. If you're married with kids, then of course you have kids to take care of. You feel the weight that you need to provide for them. If you are single, then usually you would have to handle more things by yourself. Maybe now you're living separate from your parents. You have bills, you have commitments that you need to take care of. So I think for a lot of people, especially if you have rushed through your 20s, career seeking, or maybe have not looked at your finance so much, in your 30s it can be a little bit of a shock. Oh no, I suddenly have to think about all these other things, and all at once can be quite overwhelming.
Okay. And Amir, what do you think?
I want to quote what called Dr. Sheikh Muhammad Ibrahim talking, actually highlighted in newspaper. Recently, I think 2 or 3 days ago. He highlighted something. He mentioned that the salary of Malaysian fresh graduate in Malaysia is only 2,000 to 3,000 ringgit. Right? He actually highlighted. He said that when he first started working in 1984, he was paid ringgit Malaysia 1,300 ringgit. He said 1984. So he mean 20 years ago. He pricing, he put there, okay, if we have inflation of 5%, so Malaysian, their first job when they graduated, we should actually get salary around 7 to 8,000. So if you work backward, he said the current salary of 2,000 ringgit to 3,000 ringgit, you work backward, is only equivalent to 300 to 400 ringgit when he first started. He actually getting 1,300. Then what he mentioned that nation today only earn 1/3 of salary what he earned based on inflation adjusted basis. That's a main issue. Basically, our salary are stagnating. So we cannot catch up with inflation. You see, or with all the goods, all the housing prices, your groceries are went up. I think it's quite struggle for actually across all class of Malaysian from B40 even N40 actually struggle in their daily need because our salary basically are stagnating.
So do you think that saying that with inflation and all these economic factors, yes, your base salary doesn't necessarily increase accordingly, right? But do you also contribute it to how people are spending money these days as well? Like the shift in terms of, I guess, the mindset of I need to spend my money, or people who generally don't have the habit of saving money, rather more spending. I think, Ian, do you see that a lot when people come to you as well, saying like, hey, my main problem is I know what I'm doing wrong, but yet I still do it?
Oh, yes, definitely. If you ask somebody, is it easier to spend money or save money? The answer is to spend. And if you asked almost everybody out there whether saving is important, they would say, yes, savings are important. So everybody knows they should spend less. Everybody knows they should save more, but yet it doesn't happen. I think, it's just human nature, right? And the nature of our careers and jobs and lives is such that there's a lot of stress, a lot of worries inside. And we do need to understand that as human beings, we need to have a little bit of a release. And so a lot of people then end up spending that money. And I wouldn't say that is wrong per se, but sometimes it can end up with problems in the future, right? So if you overspend now, then there will be suffering later, and that's where all the problems lie.
So I actually want to link that to something that we recently talked about as well in terms of I would say culture, maybe for lack of a better word, let's call it culture, right? Or the mindset that, hey, with all these buy now, pay later services, with Grab, buy now, pay later, Shopee Pay, Shopee S Loan, Boost, Fave, Atome, so do you also think that because of these services are so easily accessible or easily used, that this also contributes to financial difficulties, 2 financial challenges, and also the mindset that people think, oh, it's only a small amount now, but in fact it does accumulate and cascades over time. Like, what do you think?
For sure. But we understand from these companies, their job is to earn more money, right? To increase revenue. And so they want you, us, the consumer, to spend easier and faster. And so they give us ways to do that. Pay later, break into installments, and so on. So that's definitely contributed. On the other hand as well, for us as the consumers, I think for myself, when I look at my expenses, I straight up admit that sometimes I am a little bit tempted. I remind myself that these are here to make me think less, right? They're here to make me think less about my purchase. And so therefore I take a step back and try and see, do I really need whatever it is that I'm currently looking at?
Number, how do you feel?
To be honest, I'm part of the problem. Okay, if you look at it, basically there's a lot of promotion. Basically, a lot of corporate now giving a lot of things to make expensive thing affordable. For example, every 2 years I change my handphone, the flagship one. Every time I own, because basically, every year you get 2 years contract. So when contract expire, you got phone at discount, but you can pay up to 24 months. Even you can see car, nation allow for you to take up loan up to 9 years. You can never heard that in any other country, right? So our mortgage, our property, up to yours, you are 70 years old. Imagine, you are 25, you can take 45 years loan and buy 1 million home, and you are still paying small amount of monthly installment. In fact, that one is very, very, very expensive. So we have too many things that actually incentivize us to buy, because we actually spending based on monthly installment. That's the big issue. That's why what you think about it, I try to delay some of my purchase. For example, my phone contract basically will always be 2021, 2023, 2025 should be April. I still not yet change my phone yet. Basically.
What phone are you using now?
I'm using Xiaomi.
Uh-huh.
So I bought it. Now it's sub 2000. When you look at it, right, the phone feature, I think the technology already hit, almost hit. Already. Even you buy the most expensive phone with a mid-range, it's not much differences. If you not even notice it. When I first get a contract, I buy a phone that can zoom 100 times. I never use it anyway, right? No.
Sure.
So
I
it's
think
just
to
excessive.
add on to what Amir said about installment plans, when we talk to clients normally, these are the one things that I try to, in a way you could say, educate about it. So if you have a 100 ringgit installment, let's say it's what's common now, water filter, or
Koei. Crisp Koei.
a water filter, very common, right? And then we also have maybe a device, right? An Apple Watch or something like that. And so it's 100 ringgit, 100 ringgit, 100 ringgit. It seems very small, but you put 10 of them together and now you're stuck with a 1,000 ringgit a month commitment. And that could go on for a while. So my advice usually for clients is that if you're thinking of buying something that is, let's say 1,000 ringgit or 1,500 ringgit, think about that sum. Are you ready and willing to spend that full sum on your device or whatever it is? And if yes, then okay, put it on an installment plan, it's easier for you. But if you can't afford the 1,500, then don't decide, oh, it's 100 only, I'm going to buy 100.
On top of that, we also have, we have so many coffee shop mushrooming. Imagine it's only $10, right? But if you, like me, I almost drink coffee almost every day. $10 with some is 300 ringgit a month.
Yeah. I want to bring up something that I heard in terms of saving and the fundamentals of, I guess, saving or building financial base, right? I think I read it once before where someone says if you can't afford to buy something 2x times, then you can't afford it. And I think from that fundamental basis, I think it is true that, hey, what Ian said, if you think you can afford the final amount, then sure, by all means, break it down to installments or payment plans. But if you cannot afford the final amount, then it's something that you should definitely not even think about unless you're ready, right? And in saying that, given these challenges, what foundational or fundamental steps can an individual take to start building financial resilience? I guess you can start from anywhere, but what would be, I guess, in your case, the guideline or a plan or the steps that you would start with?
My advice to clients usually is that if you could only learn or you only have mental space for one thing to do about your finances, then just make sure that you don't spend more than you earn, right? Make sure your cash flow is positive. If your cash flow is positive, everything else just kind of falls into place, right? You have spare cash to treat yourself for bad days, maybe. You have spare cash to take your family member on their birthday. You could weather unexpected expenses, some emergencies. You could even use that money and invest and build assets, right? And then you can look at all the assets you build and, ooh, feels good. So generally, if your cash flow is well managed, everything else will fall into place. And if you can only do one, do that, okay? But I also want to mention that for a lot of people, they feel a little bit stuck, right? Oh, if my rental is 1,000, how am I going to change my rental? And so don't just look at the expenses, right? We talked about salary and income earlier. That is also another factor in financial sort of management responsibility as you grow, right? It is also our job to make sure we are always seeking as much as we can earn, right? That doesn't mean side hustles or side jobs. It means that you are constantly looking to increase income. So it could be maybe applying for different jobs. It could be doing more appraisals. It could be, fighting for more projects and so on. And this is something that is quite important.
Okay. Well, I mean, what do you think?
Okay, basically what I recommend for you to go and consult an expert like Ian. So basically, certain thing that you buy, you need to consult certain people. For example, I see a lot of my friends actually bought property, right?
Okay.
You bought property, you got property, you got some offer, say, okay, free, legal fee, everything. When you start purchasing, suddenly there's a lot of hidden costs coming up. For example, not many people know that stamp duty is actually a huge cost when you purchase property, right? I think you purchase 1 million property can easily reach 30,000 ringgit. That's part of the expenses that never been budgeted by so many people. A lot of people, when they buy car, they're thinking, okay, my cost is only monthly installment. They don't taking into account your maintenance, don't take into account the petrol and the insurance that come with it, right? Certain purchase, big purchase, especially you should consult the expert, the financial planner, or you should consult people already has experience purchase like property, car, anything else. That could save you some of what I call hidden costs, right? Cost that you not accounted for. So that make sure you make a better and proper budget before you start purchasing, especially on a huge item.
I think that's a very relatable thing. I know a lot of, I guess, speaking from experience, friends, 30s, 40s, they're experiencing the same thing. First time house owners. Wow, my house costs 1 million. But there are so many hidden things: stamp duty, agent fees, property documents, legal review, all this stuff, and it all adds up, and it ends up becoming very overwhelming. So I do agree that you definitely do need an advisor. You need the proper education and also the proper sort of plan. I guess strategy really helps. What about, I guess, from an investor standpoint, right? Do you think that same thing applies as an investor? You go to, I would say, go to a financial planner, go to an investor, but what about the investors who don't know anything?
Basically, before you start, you actually have to consult with expert. We have a lot of financial planner. Ian, one of them. Basically, you look at investment. No, I've been to so many houses. Right? One of houses that I work with, they have 102 funds. So then I move up to that house. I move to another houses, and that another houses have 104 funds. Can you imagine from one house? You have a selection of 102 funds. How come you actually can make what I call rational decision to choose which is the right fund for me, right? So the 104, even you have 10, well, it's very difficult for you to decide. You know, the ladies, even they want to buy one shot, one bag, so they take hours,
Yeah.
That's why first and foremost, you need to go and consult the people that know, and you have to review everything. Or the best case, actually, you go to see certain platform that actually very simple to use. MYTHEO is one of them. Basically, we have a few, but MYTHEO, basically, I work with MYTHEO. I know it's very simple, easy. It's only one platform. What you offer, we only basically have very easy to use. You just need to answer 5 questions. That basically. And otherwise, you can also go to consultant.
Point of there.
Sure, I just want to add a bit. Last I checked, there were only about 2,000 of us licensed financial planners in Malaysia. I think, or up to 2,000. The number fluctuates. So whether that's a lot, Amir, or not a lot, I'll leave that to you. But if you consider to Malaysian population, actually not many of us around, but we are here to try and help as much as possible. When it comes to investments, we feel that that's actually step 2. Brandon? Step 1 is what are you trying to achieve, right? Are you investing for, the simplest is retirement. Sometimes people invest for children's education. Sometimes it could be that one massive holiday trip you want to take at 40 years old, for example, right? So what is that objective? How many years do you have? What kind of your tolerances of fluctuations are going on? These things matter. And so once you're clear about that, then I think look for the investment that suits it.
And how it can help you achieve your goals.
Yes, exactly.
I think
right? There's no point investing if your goals are not achieved, right? Then just doing for the sake of doing.
Make sure you get there as well. Like I said, it's a whole journey, right? You know what you want, you know how you're gonna get there, you know why you want to get there, and at the end of the day, at the end of the break golden road, you're like, I'm here, I've done it. Right. So that's the ideal scenario, but we all know things happen in between. But okay. So speaking of the light at the end of the tunnel, the big golden bridge to the road, now let's say we are there. We are ready to retire. And I want to talk about this topic because, quite frank, to ask you guys for your thoughts is, are Malaysians ready to retire? Can we afford to retire? Right? What do you think?
Generally, no. I think a lot of people around the world also face the same thing. But specifically to Malaysia, if you look at, I think one of the things that we wanted to discuss about is the EPF's minimum savings, right?
Mm-hmm.
That at 55 years old, you should have 240,000 as of the time of taping this. Let's understand how EPF came to that number. So EPF is doing that based on 20 years of living at poverty level, right? So they have calculated that 1,000 ringgit a month of living for 20 years. Not including inflation and not including, how things may cost later on. So if you follow that number, then you are just preparing yourself for minimum sort of living standards, which is actually would be quite bad. Right? Poverty level is the way they call it. So you're going to need a lot more, right? And I think data from the EPF has shown that a lot of people do not have enough, and so I think we're going to have a problem.
Two topics of discussion come out from there. First is saying EPF, you say it's not enough, right? What are the alternatives for individuals who know, hey, I don't think my EPF is enough? What alternatives can they explore to maybe reach a certain goal, a certain figure, or to be ready as they can be, right? And also in terms of personalization, how can someone like MYTHEO, right, help to close that gap in terms of realizing that your retirement savings is not enough, I need more, and what steps I can take now to achieve that?
I think there's nothing wrong if you do self-contribution. So EPF is not enough based on your salary contributions from your employer contributions, but you could always do a voluntary contribution on top of that. I think that is perfectly fine. If that amount is sufficient for you based on we calculate how much your living expenses need in the future, then sure, that should be okay. However, EPF is a little bit more on the conservative side. So let's say whatever investment or allocation you can do to EPF, based on EPF's projected rate of return, you're not going to get to your target. Then we're going to need to speed things up, right? Then we need to do for something a little bit more aggressive. And that's where you may allocate, instead of allocating self-contribution to more EPF, you could probably allocate it to other tools, funds, things like MYTHEO to try and accelerate you to try and get to that target.
And I mean, how let's say you do that, how does MYTHEO close the gap for these things?
Okay, let me start when I first started my investment journey, right? So when I first started, I actually trade shares directly, and I buy foreign shares in other market basically. So there's a lot of licensed broker actually offer this kind of investment. You basically, typically, normal Malaysian broker you can buy like Malaysian market, US market, Hong Kong market, and some of Thai and Indonesian market, right? So there's a problem. When I do trade with one of my broker, there's one problem. I put money in ringgit. Imagine, in ringgit. I want to buy Hong Kong stock or Thai stock. Basically, I still have holding in Hong Kong and Thai stock, right? When I want to buy Thai, they have to convert into Hong Kong or Thai. And what is the most broker do? What is the spread they're giving you? For Hong Kong stock, they charge me 5%. It's much higher than
Exchange.
the exchange rate itself, right? Because basically that's the kind of rate that you can find in the airport, right? So basically, by the time you put 100,000 money, you lose out but 95,000. Then you buy Hong Kong stock. Then you have to sell and take out Hong Kong dollar, and you have to buy another Hong Kong stock because you want to save currency exchange. There were quite a number of my friends that try to do things. They never buy Indonesian stock because Indonesian stock you cannot hold rupiah. Basically, if you buy Indonesian stock, you sell it back, they automatically convert you back into ringgit. So you have to pay. And Indonesian buy is quite expensive. It's 7.5% one transaction. So if one buy, sell, the full transaction is 15%, right? So it's getting that the two problems that we can see, right? Trading stock in global market is very expensive, not just because of brokerage fee, but because of exchange. And for you to shift from one market to another market also very difficult because of this cost. So that basically what you can do with MYTHEO. Basically, from MYTHEO, you just put your ringgit, you convert you in US dollar, basically because we only invest in US dollar, but that US dollar can invest in so many market. So that's a done deal for you. But the second part that you have to manage, basically just like you buy a property, right? You have maintenance, you have to do maintenance. You buy a car, you have to do maintenance. So MYTHEO have this kind of maintenance, what you call rebalancing. Basically, rebalancing is just like MYTHEO help you to actually take profit on your profitable investment, right? So then we have another process what we call reallocation. Reallocation is process where MYTHEO actually invest. For example, we only invest in ETF, right? You think, oh, this ETF actually there's another better ETF. We basically sell this ETF and buy another ETF. So basically, all this done automatically. You can just sit at home, watch Korean movie or go eating out
Your nasi
whenever possible. Your nasi lemak.
Okay. So I think in terms of, so MYTHEO is a product that sort of has the algorithm and the flow and to automatically do it for you. You know, if you're a beginner or a younger person, or even if you're not so savvy, so to say, right? So going back to, I want to talk about something that you mentioned as well. The EPF is calculated on that poverty line, right? Assuming this is the bad minimum, right? So what about for younger Malaysians who, let's say, earn that 2,000 ringgit basic salary, right? And how can they start building wealth earlier with this, I wouldn't call it low income, but this basic income? And how can they benefit from compounding returns or interest?
Well, two things there, Brad. First is compounding, right? So if you calculate how much, if you start now, right? Versus starting later, how much additional you would get. I think there are a lot of articles and a lot of stories, videos, all going on that you should start earlier, and you can see the effect. So starting early definitely will help. The second part is how then, if you are not of such a high income level, how then do you build wealth? I think that boils down to what I mentioned earlier, that one single thing, that if you can only do one thing, do that, right? Make sure your cash flow is positive. And if your cash flow is positive, then whatever else that you can allocate, allocate. And there's some things that I tell clients as well. I have some clients who are only able to save 100 ringgit a month, and they feel a little bit ashamed, sometimes when they tell me. And I say, no, that's not for me to judge, right? It's for you, and it's your capability to build your future. And I've seen clients who do that over many, many years, and now they have 10,000, right? Which they would not have had if they had not started investing. And when we do our reviews and the clients look at it, I can see that there is a lot like a shining light in their eyes. Like, oh, wow. I do have this. And they are a little more confident when they approach things. And then sometimes they find some way to increase how much they are saving and investing. So I think, yes, it's don't worry so much about what is that poverty line and what EPS required. If you feel that your income is a bit too low, go with the basics. Just make sure you have spare at the end of the month.
Okay. Anything to add here?
Okay, basically, as mentioned, we are quite a bit lucky because we have EPF that actually carry you with very high return. To be honest, we have a Singaporean influencer recently talk about EPF is like a goal. So because CPF only giving you 2.5% and EPF just announced 6.3%, you can look at the differences. I done my own calculation, right? You put 100,000 ringgit today, right? 100,000 ringgit, and one Singaporean, you put 100,000 ringgit in EPF, you have 100,000 ringgit in EPF, and one Singaporean would 100 Singapore dollar in CPF. It took 34 years actually. The amount of 100 ringgit equivalent to
The Singaporean dollar.
equivalent Singapore dollar.
Okay.
34 years. So that's what I call is because of the differences between
The interest rate.
the interest rate, and that actually continue compounded years by years, and actually you can see the result over 3 years. Of course, over the short term you cannot see any meaningful differences, but you have to wait longer. Timing is in the market is so important. That's why you need to start early, regardless any amount, because the time in the market is more important than the size of the capital or the size amount that you put money into. So better to start early. If you can start before you were born, better start before you born. You ask your parents, you are planning to help me.
Put money in.
Put
So I
money
think
in,
that's what
right?
we say a lot of the times. It's not investing or rather growing wealth. It's not really a sprint. It's really a marathon. A little bit day by day. You compound and then wow, like you say, 100 ringgit today, 10,000 ringgit. And you feel like, wow, I did that. And then you sort of, I agree in a sense that it does drive you, does motivate you to maybe increase that, right? And I think that's a very important thing, especially when it comes to what we talked about just now, is with inflation, the spending habits, the cost of living, everything is more and more expensive. Your coffee 10 ringgit, bro. Mine's like 12, dude. So I think that does come with the journey, the habits, and how do you eventually continue on. It's sustainable. I think I want to say it's consistent and sustainable. So moving on to the next sort of topic is now we've talked about saving, we talked about the financial basis, the financial roots. Now having done all that, what about investment opportunities, right? How do we explore potential investment opportunities to grow that wealth, build a life, right? So I think, I'm going to throw this question to you first. Why is investing essential? Let's say to our listeners out there who maybe want to learn a bit more. Why is investing so essential for long-term financial stability?
Okay, basically, you look at your cash, right? If you have cash and you put it under pillow, you will not earn anything from the cash. Especially when you look in the world today, right? There's so many investment options available, right? And some option is for you to start is very small. Even at MYTHEO, you only need 100 ringgit to start, right? So basically, that's what you need to do. So when you look at the investment option, please make sure first and foremost your provider is licensed. There's so many, you have so many things, so many people lost money, and their investment makes sense. Some investors need to try to guarantee you, right? Say, I put money, I can get double in 1 month, 2 months, or 3 months. It's just nonsense. If they can do that, they will not ask you to do it for you, right? There's a lot of trading platform that come up. You can see it everywhere. Right? You have forex exchange, you have crypto nowadays. But basically, you must focus on your objective. So, what you want to achieve? What is your ultimate goal? And you make sure that for you to achieve that goal, the road that you're taking is less bumpy. And don't listen too much what happened into the headline, right? You can see what happened in month of April. You can see, right? In month of April, actually, I'm now writing article about what happened in month of April. Basically, month of April, you look at the performance, you look at stock market, right? Because of trade war. From April to 7 days later, from April to 8th of April, actually, your investment was down almost 12%.
It's all over the
But
place.
out of sudden, from 8 April to around 22nd April, everything actually rebound. Whatever the losses that you usually have, actually all you recoup it back lah, basically. So for people that actually panic, read so many things in the headline, they actually tend to buy at the bottom lah. Unfortunately, you're losing out and you're missing out the opportunity. Therefore, most important, you might sure lesson, don't too much focus into what happens surrounding all negative bad news in the surrounding. You just focus on the objective. Focus on the long term rather than short term, because you're not going to monitor. You are not full-time trader. Just let, if you don't have time, basically you just let other people to do it via MYTHEO to platform, or you just go to see a financial planner and ask for the advice.
Because paper loss is not realized loss yet. It's not on paper. Ian, what do you think?
Well, for investments, of course, you want to achieve your objective. I think maybe I'll approach this from the point of view of like, how do we manage the clients? 'Cause, especially if our clients or somebody who I meet is not from a financial background, not in financial field. I have noticed a trend that you feel like you're not part of the finance group. So then therefore, what they're doing, they've already made the returns. I need to find something else. And so if you have that mindset, then a lot of times this leads to finding unlicensed entities trying to do things outside the box. And my advice basically is don't do that. Right? Keep things simple. We have a lot of licensed fund houses, investment platforms, apps like MYTHEO and so on in Malaysia. Find one of those and you'll be perfectly fine, right? So don't try to complicate things. Now, if you are a multi-millionaire, we're talking tens and hundreds of millions, then yes, maybe you want to get a bit fancy. But otherwise, keep it simple. Grow your money assets. Don't put it all over the place. Use one or two platforms that you like that are convenient for you, and then look at the money grow. Encourage yourself, right? So remember, if we are on a diet, right, we want to see progress, right? If we are on a gym regimen, we want to see progress. So let's see your progress, right? Don't put everything everywhere. When it comes to also for investments, I think Amir hit the point about how much time you have. I also mentioned this to clients, right? It's very important to evaluate two things when you want to approach investments. The first is how much time do you have to manage a particular investment? So you have a lot of time, that's great. Then you can probably look at investments that take more time. But there is a second very important factor as well. How interested are you in the subject matter, right? You could have tons of time. You could be a business person and your time is flexible, but you just really hate looking at numbers, looking at reports. And in that case, then don't torture yourself, because otherwise every time you look to invest, it's going to be a chore, and then you may put things off, you may miss opportunities, you may sell at the wrong time and so on. So you don't want to do that. So take this into account. And also, people who are in investment, who are in financial spaces, generally tend to be a bit more aggressive because they know, they are aware. They know what news is real, what news is not real, okay? And so they may tell you, oh, you should be putting your money in this particular fund or that particular fund. I also want to make sure it's very important to realize that 1 ringgit of gain does not feel as good or as the negative emotion of 1 ringgit of loss. So you got to be very aware of this, right? It's no point following your best friend or your spouse or whoever it is that is investing in something very aggressive if it keeps you up at night. You can get stressed, and what happens when you're stressed? Then there'll be a knee-jerk reaction. Oh, Trump's just announced tariffs and oh dear, sell. And you sell right at the bottom. And so then that gets into that, okay? So to wrap it up nicely, basically, understand how much time you have, how interested you are in the subject matter, keep things simple, grow your assets, and when you have 50 million, then come talk to me.
That's great. So a few things that you say. So let's zoom out a little bit. So you're saying, hey, I don't want to be stressed. I don't want to follow my best friend, follow my spouse, follow trends. Or I don't want to follow more, right? So zoom out, that it does boil down to risk tolerance, right? So as, like you said, out of your finance bros, as an individual, right, how would you assess risk tolerance? Or if someone came to you and asked you, hey, I want to invest, right? And the first thing you say is, hey, what is your risk tolerance? How would you assess that?
Well, we have all our risk tolerance questionnaires. I'm sure MYTHEO has the 5 questions as well. Right? I try to understand them a little bit better, right? I want to know what are the influences in the person's life and so on before I sort of make a recommendation. However, we do tend to lean towards moderately aggressive, right? If you are going to be investing, if you're only putting it in something safe like a fixed deposit, you can't be expecting too high returns. So if you do need to make the gains, it has to be a certain level of risk, right? So when you take a calculated risk, the most important thing I teach clients is that you have to know how long you're going to put this money for. You have to try and commit to a strategy, right? And even if you see and hear news, please talk to me about it. I will explain to you what is going on so you understand that there's nothing to worry about. Oh, in this case, these are the things that we need to be concerned about. And usually when you know, oh, it's not too big a deal, then you are fine with it. And you understand that the market will fluctuate. There will be paper losses of 12%, 20%. Sometimes there will be that. But as long as you get to where you want to go, then that should be all that matters.
Okay. So, as from the other side of that, right? How does MyTheo assess risk tolerance?
Okay, it's very simple. You know that we have 5 questions. You just need to answer all the 5 questions. So then, if you don't satisfy, you think, okay, when you answer 5 questions, we give you what you call a risk profile. You don't like, you actually can adjust it using the slider in our platform. So our platform is very, very simple for you to use. So you make it as simple as possible, as minimum capital as possible to make it what you call reasonable, affordable for all Malaysians to invest in our platform.
So it's very much personalized. I think the human element is very important for both platforms, I guess, for both a robot advisor or I guess human interaction such as yourself. So that sort of personalization is very important. How you feel that what best suits your needs with people in different points of their lives, suiting their needs, based on risk tolerance and their investment keys, I guess. As we come up and round out to one of our final topics, let's get a bit more technical, a bit nitty gritty. How do we leverage our technology, especially with platforms such as MyTheo, with algorithms, having a robot advisor? How does technology revolutionize the way we approach investing, or even to the concept of financial saving and building wealth long term for a better life?
Let me start with one professor called Harry Markowitz. So in the world investing, Harry Markowitz started what we call modern investing today, right? So what he telling about modern investing is about managing risk profile. What the core of modern investing, basically you need to buy different asset class that uncorrelated to each other. Basically, you are buying something that go up but not necessarily go down, because that if you buy another asset that go down, that's negatively correlated. But if one asset goes up, one asset will move randomly. That is the basic tenet of the modern investing today. That what we implemented in MYTHEO. Basically, what we measure, what we do in MYTHEO, basically we look at risk. What we see, we invest in what you call today, if you invest in Omar Kassim portfolio, we have 27 ETF. We might make sure that this 27 ETF is a least correlated to each other based on modern portfolio theory. Because based on this theory, if you are least correlated, the portfolio, your investment become less risky. Then we use another another theory, what you call value investing. You know that Warren Buffett actually now is actually a father of value investing. So what value investing, you try to buy a cheaper stock as possible. That's part of our tactical allocation in our algorithm. Basically, our algorithm, we always look any ETF that cheaper compared to their historical version. That's why basically these two actually main component to our algorithm lah. Basically, we have a lot of algorithm, but this is the base, and the base is based on study. Basis make up very, very what I call intelligent people, right? They introduce they done study, they do back testing, and it's proven. So the risk and investing based on various factors like value, growth, on etc. And we just translated into very complicated algorithm and make it simple for you.
Okay. How would technology help you, Ian? What do you think?
Perhaps I come from a more from the client side, right? Point of view. I think at the end of the day, as long as your objectives are accomplished, then the amount of technology you use would depend on your personal preference. I think some people would like more hands-on, right? Some people just enjoy it, right? They want to feel that they have some sort of control, and so then there will be a more manual kind of investing. Right? Everything is online nowadays. Everything is. I don't think anybody stuff needs a paper form anyway. So we're talking about technology as in technology deciding things for you, right?
Yeah.
So if you feel that that's not your cup of tea, you don't want to hands-on or manage it directly, then yes, technology can help you. Right? It can make choices for you that are faster than what you would have been able to do. It can also avoid perhaps some emotional decisions. I think at the end of the day, we're all human beings. As logical as we want to be, we are affected by news. We see everybody's talking about doomsday. We can be like, oh, is that the right thing to do? So it can help you in those ways, right? But I also feel that sometimes it depends on a particular market as well. So if you're investing in some markets where the algorithms may perform better, then sure, that's a good way. And some markets where if you're really on the ground in that area and you know the economy in that area, you could probably navigate a little bit better. I think there's no one size fits all. Okay, but I will admit that if you are a brand new investor and you have no idea, you don't know where to start, then definitely technology can help you in that case.
I think just like that, having an emotional, I guess as an investor, there are two types, right? Two, I would say extremes here. One who really wants a human connection, then we go to you, or they want to say, hey, I will trust what the algorithm says based on my behavior and the robot will do it. And that's where MYTHEO comes in, especially when it comes to automatically reallocating your assets or reshuffling your things. And I guess for you, it's a phone call away or a message away.
More to clarify a little bit is I don't I'm not an investment advisor in the sense that I'll call you up today and tell you, Brandon, today you're going to buy this investment. I'm not that. My job is basically to make sure my clients achieve their financial objectives. And then what I do is then I look for tools, potentially something like MYTHEO, to help my clients to achieve that. Like it's kind of like, okay, we need to travel down to Singapore, for example, and we need to get there in 6 or 7 hours. Okay, so then what I'm going to do is I'm going to arrange what vehicle we're going to take you there, and what kind of comfort level, how much you're going to put in. So is it an MPV, or if we need to just get there as fast as possible, what kind of car, or if let's say the client needs to get there in an hour or 2 hours, then we're going to get the flight out, basically. So this is what I do, rather than just picking the investors. At the end of the day, if the client achieves their objective, then that's my job done.
Okay, great. I think that is how we're looking for time. I think we're... So that brings us to the end of today's episode. We've explored themes of how we embrace flexibility, continuous learning, financial planning, strategic planning, and how all these things can empower you to build wealth while navigating life's many challenges. A big thank you to our guests Ian and Amir for joining us today and sharing your insights. I think it was a very fruitful discussion and learning more about individual platforms and what you do as an advisor as well. If you found today's episode helpful, like, comment, and maybe share it with a friend who you think needs a little bit more financial stability in their life to grow their wealth. Until the next one, see you next time.